Hello, welcome back. Okay, starting from this video, we are going to backtest our strategy. As we have discussed, we have developed our own strategy where we can take our time to draw support, resistance, trend lines, identify those areas where there might possibly be a trade opportunity. Then we have also listed risk reward ratio management, then stop loss and take profit. So by following those strategies or plans, let's see this chart. So this is pound USD, as you can see here on the symbol area, and it's on 4-hour time frame. So remember, this is a replay mode. I went back to June 18th from 2021 last year. So starting from that area, I'm going to backtest our strategy. So you are going to see me play the chart, and we will follow the chart by drawing support, resistance, trend line. I'm not going to get deep into our strategy in this video because this is the first one. So but briefly we will we'll see how we can draw support, how we can draw resistance. So in this video we are going to focus on supply and demand area, or resistance and support. So let's see. Now let's play our chart and let's see. Okay, so remember, this is 4-hour chart. Okay, so the first thing I have realized here is the market has reversed its direction. As you can see here, it was going down like this, but it has reversed its way up, right? So what we can do here is we can take this area as a market structure, and we can take this as a low. So market has formed a low over here. So let's take this area as an important key area. So if you zoom in here, sorry about that, let's zoom in here, and you see, when you zoom in, we have these wicks 1 2 3 4 and 5 wicks, and we have 4 bodies, right? 1 2 3 4 bodies. So almost they are at the same level, the bodies, but the last 2 bodies, they are at the same level, the black one and the green one, and the other wicks, they are almost at the same level, but this one is a little bit lower. So it doesn't matter. I'm gonna connect this body here, these 2 bodies, with the last wick, so the last bottom of the wick. So what you need to do is grab your box, take it, put it at the end of the bottom, the bottom of the body, grab it down to the end of the wick. You see, you've seen what I did, right? So I started from the bottom of the body, went way back down to the wick, to the tip of the wick. So that's it. So in this area, in this zone, so we can add a note over here. So this is a zone, and it's a zone where traders took action. So here a lot of traders took action, because as you see here, the bodies, as soon as they enter into this area, this zone, they are getting rejected and wicks are getting formed, right? The second body also, it has a huge wick, it got rejected from this zone, and another one here, we got bounced up exactly from the top of the zone, and this body also, it went way down to this area, but unfortunately it got rejected. So we have all these wicks inside this zone. So this area, this zone, is an important area next time when price comes back to this area. So let's play our chart and let's see what happens. So as soon as the market reverses its direction, what you need to do is spot those areas, put your boxes over there, identify the wicks, identify the bodies, and if you think those areas are very important or key area, you can draw a line over there. So what I see over here is, here we have wicks in this zone. Actually, this candlestick, it's called order block area. We are going to discuss this about in another video, but let me explain this here briefly. So this area is order block area, where banks are getting into the market. So banks entered into this area. So we can take these 2 candles, they are equal, right? The green one and the red one, they are almost equal with almost equal wicks. So we can take this area as an important area, and we can put a box over there. So in this type of areas we have to put a box including the bodies. Just exclude the wicks, or if you want to include the wicks you can, but in this case I'm going to exclude. So put your zone starting from the body, the opening and the closing part, like this. So as you can see here, price came to this area and got rejected, so you have these 3 wicks inside the zone, and again it's reacting at this area. So let's see what happens next. If it breaches above this area, that means that area fails, but if the price gets rejected from this area, that means the area is valid, right? So but as you can see, price got rejected way down. It went up, we have wicks here, another 2 wicks, the market reversed back down. If it comes back up again, it may get rejected, and bears may get a lot of force to push the price back down to this area again, right? Or maybe this area. So we will see that. We'll see that in a bit. So let's play the chart and follow. Okay, so it looks like it's going down to test that important key area. So let me pause this and let me show you. So the price struggled to break this area, right? So price struggled to break below this area. You know why? Because this area is important area. Let's see, if you take these 2 wicks, they got formed from this equal level, and we have this candle here and another candle here, right? So a market came down, that bounced up from this area, from this level. We have another wick here. So what you need to do is try to visualize the chart and see wicks and bodies and reversals. So if all of them are almost at the same level, you can draw a line over there. So that line can be crucial area for you, where market struggles. Most of the time market struggles in those areas. So I'm gonna put the box over here like this, because here in this box area we have price bouncing up, right? We have wick here, we have 2 wicks, we have another 2 wicks, right? And market bouncing up from this area, try to go up, but as you can see, it struggled most of the time, right? It struggled. As soon as it comes to this area, it struggles to break down, but finally it was able to break the support area, right? So that means if it's able to break below this zone, that means the market has a potential to go to the next support area. The first support is this area. Below this, we can draw a small box over there. This can be not key but small support, and another key support will be this area, right? So let's see if the market retraces back to this area. Yeah, so let's see. You see what happened, right? Exactly after breaking this key area, it has struggled to break, but finally after breaking, the market didn't hesitate to break this support, because this one is a weak area. It has only tested 1 time, so it's not valid, right? So it broke down, went way down to this area. So let's see if it's going to touch this area. Probably it's going to touch, form wicks inside, maybe break below, probably. So let's see. Let's play the chart and see if the price comes back down to this area. So let's pause this. So you see what exactly happened, right? So here price broke down below this area, this support, then went back, but tried to retrace back to this area. So as you can see here, it formed this huge wick. This area is called a liquidity grab. We are going to talk about this in the coming up sessions. Liquidity grab is very important area for you to take trades, especially for sniper entries. So liquidity grab. So liquidity grab means those areas where market is reversing its direction. Here in this key support area, it was support here. Now it's a resistance, right? So price tried to breach above this resistance, but it got rejected and formed huge wick. So this huge wick is called a liquidity grab. So after forming this huge liquidity grab, what happened is market pushed down to this key area. So you see, it's almost 44 pips drop in 1 4-hour candle. You see what happened, right? As I've told you, it went down to this zone. Now let's see if it's going to support. I think in my point of view, it's going to support. This zone is going to support the price. It's going to form multiple wicks, or maybe bounce the price up. Yeah, okay, let's see. Let's play the chart. Okay, it looks like. Okay, so see. So first what happened is, here we have bounce, right? The first bounce is exactly from the top of the zone. Try to go up. Let's measure the pip, right? So it went up 35 pips, but it couldn't go back to this resistance area. Price pushed down to this area like this, from this to the zone, and finally it closed the candle below. This candle, the black one, it closed below the zone, right? So again, after closing that, it couldn't form another black candle, but another green one printed, and it closed inside the zone. So still that means there is doubt. The bears are not in control. Bulls are trying to push the market above this area. So let's see. We are going to decide that this will be bearish. I mean, if it breaks this zone and prints another black candle after this one, that would be a bearish scenario. But if it's going to print another green, or this candle forms a wick and closes inside the zone or above the zone, that would be a failure for bears. So let's see what happens, right? Okay, voila. So it looks like it has printed this black candle below the zone, and another this doji candle with a wick above and below with nobody, then black. So these areas still, they are for me they are doubts. Like there's doubt in the market here in this area. There is doubt in the market. I mean, people or traders are not sure where the market is going, even though it's below this key support area. Even though it breached below this support area, traders are in doubt. If it was like in favor of bears, it could have pushed down aggressively, right? Because it breached this important key structural support area. It should have dropped, but still it's forming these small candles. These small candles tell you that there is doubt in the market. So we can add a text over there. Now let's see, is it gonna come back up this important zone, or test this area and continue downward? Let's see what's going to happen, right? Okay, yeah, so you see, after forming these doubt candles, price went back above this key area, because the breakout below this area wasn't legit. If it was legit, it should have printed this type of huge candles and continued breaching down, because this area was key, right? But it didn't, right? It printed these small candles. These small candles tell you that there is doubt in the market. So what happened is, immediately bulls stepped in and price jumped inside this area. So now let's see what happens. Is it going to test this area? So I think it will go up to this area, test this area, maybe come back down, make sure that this is still valid support area, then bounce up to that area again, to the key support, right? So let's see. I'm gonna remove all these objects here. Now let's play the chart. Okay, so it looks like it went up, got rejected, formed another red candle. Is it going to retrace back down to the support area, or is it going to breach above? So you see, it tried multiple times. So this area tried to hold the price, tried to push the market down, but it didn't, right? So finally it looks like this candle is above this area. So let's see, is it going to close? If it closes above this area, voila, this will be breached, right? Unless it may form a wick and market may go back down to this area. So let's see. Okay, what happened here? Let's see. Oh my god, That's a huge candle, right? That's a huge candle. So what happened here is, look, went up, this green candle closed above this area. So but we have this area, you see this area, this zone. Let's put text over there. Key resistance. So this key resistance that we drew, right, this key resistance we drew from this area, it has been supporting the market, right? So finally it was able to push the market. You see how it got rejected with these 2 wicks, right? So these 2 wicks, they pushed the market down. Finally market dropped how many pips? Holy cow, that's about 97 pips. That's a lot of movement in just a day, right? Okay, so this could have been, you see, if you are trading, this could have been an entry for you, because this zone, it has been verified, right? It's valid, it's supported here, it's supported here, supported here, right? So when it came back to this area, that could have been an opportunity for you to take a trade. So pushed down to this area. Let's see now what happens. Since this area is key support area, I think this area is going to support, or maybe form wicks, right? Or maybe a consolidation inside. Let's see. Okay, no wicks, still doubt candles, small candles. These small candles inside the zone, they tell you that there is doubt in the market. Bulls and bears are still fighting, right? So there's no decision, but let's see. If it's going to close, look, this scenario will flip into bearish if it's going to close below this. You see this wick, right? So this candle got bounced up from this. If you go to lower time frame, you may see that. Let's go to lower time frame, maybe 1 hour, right? So in 1 hour time frame, you see we have here a bounce, right, and another bounce here. Again, it bounced up from this zone. So I think this scenario will reverse into bearish, or it will be a bearish scenario if it's going to flip down from this zone, breach this area, and close the black candle or the red candle in this area. So that would be bearish, to continue bearish. Unless and otherwise, if it comes back to this area, consolidates inside, supports this area, breaks above, it will continue up to this area. So now let's see, is it going to break below the support, or is it going to support that area? So let's see this. Okay, it looks like the zone is rejecting. We have multiple wicks, small candles, still the market is in doubt. Okay, so you see these candles, right? This zone is still acting as a resistance. It's pushing the market down. If you go to 4 hour time frame, you may see that this will be wicks. So these wicks or small candles in 1 hour, they tell you that this area is valid. It's pushing the market down, but we need to verify that this area gets breached in order to be bearish. In order to sell around this area, to look for sell opportunity, you have to make sure that the price breaks below this area. Okay, now let's wait for the price to break. Okay, so you see this, right? Again it got rejected from this zone. We have a wick from this support area. You see, it's supporting here multiple times. It has supported 1, 2, 3, 4 times, no, 5 times. So 5 times it has supported. This means this area is a valid let's add a note over there. Actually, I'm gonna put it's a valid support area. So that area is valid support area for us. If it gets breached, that means there will be momentum in the market, and market is going to head down. Let's grab an arrow. I'm gonna grab an arrow. If it closes below this area, market is going to head down like this. Or otherwise, if it's going to break above this area, I'm going to put another resistance area here. Since this one is 1 hour time frame, if you go to 15 minutes, that will be clear for you. We can remove this one actually, right? We can remove the bigger one. We have a resistance here, and we have a support here. So this support is holding the price up, right? So let's see, is it going to hold the market, or the market is maybe going to breach up like this? We have two scenarios, right? Either up like this or down. So we have to wait till the price breaks either up or down. If it breaks up, it's going to test this area. If it breaks down, since we don't have anything from previous area here, it may go down. So let's remove this. Let's play. Okay, still wicks, yeah. So this, okay, still it closed inside. So what I'm looking for is, I'm looking for a candle. Look, let me tell you this. So this candle, it moved down but closed inside, right? It closed inside and the wick is above. See this wick? It's outside the zone, the body is inside the zone, so that means there is no signal for us. I mean, still the zone is valid, it's not breached. Then we have another candle here. This candle, it formed inside the zone but closed. Okay, that's 1 point, right? We have another signal, one signal. But the other signal for us to entry is after this candle formed inside and closed outside this zone, we need another candle, black candle, to open and close outside the body, outside this area. But what happened exactly is we got a green candle with huge wick from upper side and from lower side. Okay, I am going to remove all these drawings and I'm going to draw everything again. Okay, so we have box here, acting as a resistance here, right? We have another support here. This support is holding the market. Market tried to break down, but we got a green candle here. After this green candle, we have a huge candle inside. So still the market hasn't decided either to go up or down. So let's see. By the way, let me pause this and let me tell you this. I am replaying this from like June last year, June 8th. Right, so I have no idea what happened over there. I mean, I didn't see this before I started recording video. I'm just doing this randomly with you, right? I'm not gonna edit anything. I'm just gonna upload everything raw, right? So you will see what I do when I trade. So exactly, there will be no manipulation, right? I'm not going to edit anything. So let's see. Okay, let's play. Looks like it got rejected again, went inside, so there's a lot of dot. So that means, look, since this area it got tested multiple times but tried to breach down and up multiple times, we can ignore that area and add another support here. Let's add another support here from this wick, from the bottom of this wick to the bottom of this wick, right? So this will be another support area for us, because we're not gonna take a trade when the candle closes here, because we have a choppy market here. You see how choppy it is? So it's choppy. If it was here, it's clean. We have the support here, it bounced exactly from the zone, exactly from the zone. When it breaks below, forms a red candle or a black candle outside, opens and closes outside, that would be signal for us to sell, right? But here we have choppy market, so we are going to ignore this area and draw support. So what I'm looking for now is for the market either to get supported from this area, break this resistance, right, then go up, or break this area as a support and maybe retest it and go down. So I'm looking for two possibilities. Now let's see. Okay, looks like that area is still playing with our candles. Finally we got what we wanted. So you see, okay, I'm gonna zoom in a little bit. So what I told you was either for the price to break below this area or to break above it, right? So in this 1 hour time frame, we have a candle, we have 3 green candles, and finally price broke above this key area. So this key area was a resistance at this level, not this area. But finally price was able to break above. Look, let's zoom in, right? So we have this candle. It exactly closed above the structure, above the box. Then we have another candle, this one opened above the box and closed above, right? So that's it. This was what I was looking for. I'm looking for the market price to break above, open a candle outside and close outside. So that would be an entry for us. So I'm gonna be trading a trade. I'm gonna be taking a trade here if it was for me. So I'm gonna put a long position exactly after this candle. Then put my stop loss just below this zone, because this zone has acted as a support. So that would be 13 pips. See, I'm risking only 13 pips to gain, maybe if it's 1:2, that would be 26 pips, right? 26 pips will be at this area. This will be my TP1. So I'm gonna put a line over there, and that would be my TP1. Right, so let's add a text over there. That will be my TP1, and my TP2 will be 1:2, right? So for TP1 we can look into this resistance, previous resistance, right? So this can be a resistance, so we can take a profit over here, over there, TP1, or you can follow your strategy. Since it's 1:2, that will be 26. If it's 1:3, that will be 13 times 3, that's about 30 something, right? 40 pips. So let's go to 40 pips. Let's head for 40 pips. Yeah, it actually hit this one, 40 pips also. So that means 1:3 is also valid. If you are aiming for 1:4, that would be this area, I guess. So you have to consider this area. We have a resistance here, right? So I'm gonna put a box over there. This area is also resistance. We have huge wick, so I think price may play inside this area. If it breaks above, it goes to this area, that's for sure, because this is an empty area. We don't have anything here. So let's see what's going to happen, right? Okay, see what happened? See what I'm saying? This area, since we have huge wick here, it rejected the price. The price got rejected exactly. So what happens is exactly here, after a huge rally, market is taking a break, right? Market is trying to retrace back to this area. Maybe look, we have a support here, right? This area is also a support, so I'm gonna draw another box over here. Let's remove this one, right? We took one trade already, so TP1 hit, TP2 also hit. TP2 was this one, right? 40 pips. So 40 pips breached already, so that would be TP2. So 2 trades successful, right? Then market traced back to this area. So what I'm looking for is, I am looking for the price either to play from this area to get supported. If it gets supported from this area, we may have a probability to break above this area again, play here, then go up. So price may continue its rally up. But if it breaks below this area, we have a weak support here, right? So it may break down to this area and come back to play around this level again. So let's see which scenario is going to be played out, right? Okay, you see what I'm saying? We got supported from this area only once. We have a support here, we have a resistance here, we have a support here, right? So this area acted as a support once, price came back down, got rejected, you see, breached above this area. Then we have now another resistance, this area. I know this area is a weak area because we have just only one wick or only one reversal. It hasn't been tested twice or 3 times like this, so it's tested only once. So let's see. I don't think it's going to hold, but if it's not going to hold, I'm gonna go to 4-hour time frame, and if it's going to break above this area, sorry, right? So look, we have, let's actually remove everything, right, and draw a box over here. I can actually extend this box down here, connect the end of the wick to the end of the body, right? So we have this area. If market is going to get rejected from this area, we have high probability that it may fall back down to this area because we have a support over here, right? But if it breaks above this area, we have high probability that we are going to test this area in this area. So I'm going to draw my zones over there. Let's grab a box. So the first zone for me would be this area. I'm going to focus in this area, my TP1. If it's going to break above, I'm going to go to lower time frames and I'm going to take trade. My TP1 will be this area, my TP2 will be exactly this area. So let's see, I'm going to actually extend this one to the body because this is the top of the structure, right? The structure is this one, and this is the highest point. We have the lowest points here. So let's see what happens. Okay, see what I'm saying, right? So what happened is market is getting rejected from this area because this area is a valid area. We have a resistance over here. Again, it's acting as a resistance. See, market always faces problem to breach through resistance and support because that's how it works. Like, it doesn't just break above the resistance, it gets rejected multiple times. So if it's able to close above and open another candle above, then close it above, that would be valid bullish scenario. But unless it's going to get rejected way back down. So let's see what scenario is going to play out. Okay, you see again it's getting rejected. Finally got rejected from this area, right? From this area it got rejected, went down to the area that I was talking about. This area was my target, right? So I could have shorted the market. It could, like, if you had the short over here, that would be how much? That would be 65 pips. That's a lot, right? Yeah. So we could have taken another short over here, but it's okay. So we have a support, maybe this area, right? This area can be support. If I extend my line here, we have support here, support, right? So it's again acting as a support, right, at this area. So is it going to play inside like this, go up and down, then break below, continue its rally down, or break above and continue its rally up? Let's see which scenario is going to play out, right? So you are realizing how important support and resistance is, right? So I'm not drawing any trend line, I'm not following any candlestick patterns, any chart patterns. Just by using support and resistance, we are taking trades. You see how powerful it is, right? So you have to focus on support and resistance, or supply and demand area. You have to master those. They are very important. They always work in Forex, always. See how it's getting respected, right? Here we have a rejection, we have multiple rejections here. Again, it got rejected again. All these are actually opportunities for you to trade. I'm in a 4-hour time frame, that's why I'm not taking any trade. But if it was 1-hour time frame or 15 minutes time frame, there will be a lot of opportunities to trade, right? So multiple times it's getting rejected from this area. Then from the bottom also we have this as a support. Previously it acted as a support and resistance, right? So we have support. So what's going to happen? Let's see. Got rejected. Okay, so see what happened, right? The thing what I was saying was, for the market to print a candle, to close a candle below this area, open another candle outside and print it outside, right? So what you need to do is wait for this candle to close below this zone. It closed, right? Closed below this zone. After this one, what you need to do is wait for another candle to open and close red. So we got it. It opened here, closed here. So that's red, right? So probably in a 1-hour time frame there will be a trade for you, or maybe you can wait because this area is a support area. Since this area is support area, you may not take a sell over there, but probably there is high possibility that the market is going to breach below this area because it has this area was a key support area, but it got rejected. It got breached out. So I think this area is going to get smashed, unless if it's not going to get smashed or broken, price may go up. Test this area again, because this is now a resistance, right? So let's see. Okay, see how it's going down. Oh my god, that's crazy. That's crazy, guys. If we measure this, that's 80 pips. That's 80 pips move. This is in 4-hour time frame. Let's go to actually 1 hour time frame. Let's see if we have entry. Do we have entry? Yeah, so as I told you, this was the area that we were looking for. It broke below. We have a candle opened and closed outside, so you could have taken a sale over here, targeting this area. This area will be with TP, right? So this area will be with TP1. All right, let's add a note over there, TP1. That would be with TP1. If you take a trade here, this candle, it opened inside the zone, closed outside, and the next one opened outside, closed outside. So after that candle, you're gonna take a trade. You are going to put your stop loss. Yeah, actually in this scenario it's huge. The stop loss is 25 pips, but it's fine. It's fine. I'm gonna target this one. The first target is almost 25 pips, so that's 1:1, right? So if you're going to move your stop loss down to maybe be above this wick here, let me zoom in. So we have a wick here. So this wick, it got rejected up, so I can take this as what is this, stop loss, right? So let me put my stop loss just above this area in case if it comes back up, right? So that would be 10 pips. So I'm risking 10 pips. To get TP1 will be how much? 25 pips. That's more than 1:2. That's good risk reward ratio management. Then after that, my TP2 will be, since my TP1 is 25, let's put our TP2 at 50 pips, double of that one. So let's go down to this area, and that will be TP2. Since we don't have anything from the previous area, we cannot take rejections. Just put them by calculating your pips or according to your risk reward ratio management. So see, it moved 64 pips, you have risked only 10 pips, so that's 1:6. That's crazy, right? That's crazy risk reward ratio management. So if you had kept your trade, actually it went all the way down. That's like totally how much? Jeez, that's 122 pips. That's a lot, right? If you had kept it, if you are a swing trader, right? So but if you are a scalper, that's it. So you scalp like 60 pips, 50 pips, that's it for you. You take profit one, you close half of your trade over here, you trade you keep all your positions to this area, then close them here, you secured your 60 pips. That's it. See what happened over here, right? So only using support and resistance you can trade like this. They are actually very important. For me personally, I prefer using support and resistance, right? I use support and resistance as my key strategy. I follow that daily. I may add the trend lines and chart patterns, maybe sometimes candle patterns, right? So I may mix them up with my strategy, but usually I follow support and resistance, supply and demand area. They are very important in Forex. You have to focus, you have to keep your eyes on these areas. I hope you got everything from this video. So I'm going to make a bunch of videos like this, backtesting a lot of assets. So if you didn't get everything from this area, from this video, don't worry. I'm going to make a lot of videos like this, like unlimited, maybe like 3-4 videos a week. So you are going to get like hundreds of videos, because this course, it's unlimited, it's lifetime course. Whenever we have live sessions, soon I'm going to start live session also. So we are going to trade live like this. We are going to backtest a lot of strategies. So stay tuned. I'm gonna come back with another video. See you. Bye.